I've studied every single price action strategy, and these two that I'm about to talk about today have been my most profitable. You've either seen me use it on my YouTube, on my Discord, or on my live streams to make these big profits. I'm going to go through each strategy and show you prime examples on how I use them, when I use them, and the best time of day to use them with your trades. Now, the first strategy that I really like to use are divergence plays. I'm going to show you an example from just this Friday on how I used it to take a big trade on Tesla. So if I head over here to my computer, I'm going to show you exactly what I look at. So on the left here, I have Tesla, and on the right here, I have SPY. What do I use to play these divergence plays? Now, when I look at my specific stock, I always have to look at the overall market. What do I use for the overall market? So everybody has their preference, right? Some people use SPY, some people use ES. In my preference, I like to use SPY or ES, just depending on where we are in the market. For example, if we're at a big level on SPY, I like to use ES as confirmation. But if we're kind of in range play, I like to use SPY. So I'm going to use SPY for the simplicity of most of you guys use SPY. So let's go to SPY, and I'll scroll over here to the left. So SPY over here on Friday, as you can see, had a nice push up and then a pullback for basically the remainder of the day. Now, I don't just use SPY. I like to use QQQ, right? And some of you may look at it and say, okay, so which one do you use? I use both. I always have both on the charts, as you can see behind. I have a lot of charts I can fit on my screen. Now, I might be playing a tech stock like Tesla, or I might be playing Apple, and you'll say, why are you using SPY rather than QQQ? Well, sometimes QQQ is either stronger or weaker, and same thing goes with SPY. You might get a stronger look on SPY or a weaker look versus QQQ. So I need to gauge both. So when I am trading, I'm looking at QQQ and I'm looking at SPY. For the most part, QQQ did do exactly what SPY did on Friday, but it did hold up a little bit longer. So for example, you can see we had a push up on QQQ, and as we fell, we had some pops, and then if you go to SPY, it looked like more of a drop straight down. As you can see, pull or a push off the open, couldn't get past the pre-market high, and it looks like we came straight down, and before we got a push, it was a lot later on than QQQ. If you go to QQQ here, it happened a lot quicker here on QQQ versus SPY. So let's talk about this in simplified divergence. So on Tesla, what was I looking at originally? So first things first is Tesla's been strong for a very long time. The past 2-3 weeks, Tesla's been strictly on an uptrend. Yes, it's had some pullbacks, but every pullback has been followed up with a very strong buy, right? All the pullbacks have been bought. As you can see, this pretty big pullback came from 400 down to what, 381. Next day was already at 410. Consolidated. Next day was at 428. Pulled back to 415, and then Friday we finished off at like 435. So first things first, Tesla's very strong. Okay, I noticed that. That's something I'm paying attention to. Now I have to find key levels and psychological levels. So what am I looking at on Tesla here? Where are the key levels and where are the psychological levels? First things first is 420. We kind of all know that. Even Elon Musk talks about that. It's also a key level. 420. What's next after 420 on Tesla? 425. Okay, 430, 435. All those things come into play. Now we're at all-time highs, so we don't really have prior history on this, so we can't say, okay, this is rejected at 435 multiple times because it's never even got there before. So I go here and I understand and write down and evaluate all the key levels and psychological levels Tesla has. Now, when the market ends up, pushing like this off the open, it makes it very hard to notice if your stock is strong or weak, because off the open you usually get, just normal price action as if you would get on any other day. Now, that's exactly why I don't trade stocks off the first 2 or 3 minutes of the day, because I want to see where the stock is holding up, where it ends up being bought at, where it ends up being sold at, so I can understand what's going on. I don't want to be too quick. And also with options, you have IV that needs to settle overnight. So all those things come into play when I'm trading options. So the first thing I'm looking at on Tesla is we dropped off the open here. Did we drop off the open on QQQ? No, we actually held up here and pushed through. So first things first, I'm noticing Tesla's kind of weak here, but I understand we have 415 as a level that was previous resistance and has turned on to support the past couple days. So if you put this on the 5-minute, you can see we had a double bounce on 415. We couldn't get past that. Before that ended up holding up as resistance. We broke through, pulled back, used it as support, and then bounced off of that. The next day, we pulled back to 415. Then it bounced off of it, never broke through 415. Friday, we pushed down to 415 and bounced off of that. So that showed me a good sign that we were bouncing off of a support level here. So then what's next on this? 420. But 420 is just opening level. So what I did was, if I zoom in here to QQQ, you'll see at 420, where were we? It was 9:40 a.m., 10 minutes into the market. So if I go to 9:40 here on QQQ, you can see we had a red candle on the market. So first of all, a strong candle on Tesla, weak candle on QQQ. So showing me that Tesla's kind of doing its own thing here, and that's what I need to pay attention to. One of my favorite tools on my partner broker Moomoo is it allows you to automate your trading. How, you may ask? Well, one of the coolest things that I like looking at in the morning pre-market is look at simple things like double tops and triple tops. Well, I always look at the same stocks over and over because those are the stocks that I'm used to trading. On Moomoo, you can filter certain things, for example, stocks that are having double tops, stocks that are having triple tops, and a lot more than that. And what's cool about that is, one, you do less research for the stocks that you normally look at, and two, you get to see new stocks that you never were to look at before because of Moomoo. That just shows you what the future of trading will hold and what AI can really do for trading. So going back here, you see that 420 is my key level. We talked about that. The next key level after that is 425. So I'm paying attention to those two key levels, and I noticed at 420, if you come here on the first break, this is 9:40 a.m. So let's look at 9:40 a.m. on QQQ. So 9:40 a.m. is right here. We had a red candle on QQQ, and then we had a green candle on Tesla, showing me that we have strength here now. So I find the divergence here on Tesla into a key level. Remember, just because we have a divergence play doesn't mean you just FOMO into the trade. I still need it into a key level. So I waited for a break and hold here, got in on this candle, and took this trade to the upside. Now, yes, my next key level is 425, but am I able to hold to 425? So I have to pay attention, okay, from 9:45 a.m., which is on the 5-minute here. I'll show you guys. I'll go back to the 1-minute because this is the 1-minute here. I'm in this trade at 420, the break of 420. So this candle here, right? The hold above. As you can see, we get a push here to 422.50, and then we continue to consolidate. Now I'm in this trade, let's say at 9:50 a.m. At 9:50 a.m., you would say, okay, well, the trade is consolidating. Maybe it's a good time to get out. Now I notice that we have a big candle on SPY or QQQ at 9:49 a.m., which we did get a big candle on SPY as well. But for the most part, we'll just focus on QQQ, and then I'll show you SPY as well. So at 9:49 a.m., we got a big red candle on QQQ. Let's look at 9:49 on Tesla. So you got a Tesla candle from 423.50 down to 422.20. That's not much on something like Tesla. Usually you would see like a $2-3 move on a big drop like that from QQQ, except we kind of just held there and consolidated. And then if you look here at 9:54 a.m., we had the continuation sell-off on QQQ. So if I go to 9:54 here on Tesla, 9:54, we had a big green candle, showing me that we're having divergence here on Tesla. Now, not the craziest strength, but at least holding up against the market. Next candle pulls back. As you can see, at 9:55, we still have a red candle on the market, and then we continue to move higher here as the market continues to drop. That's the first notice that I get as we have this divergence play. So I start selling into my key level at 920 or 425 on Tesla because that was my target, and then I'll take more scales or scale out this trade as we continue to break through 425. So how do I find the divergence plays? I just showed you. I'm looking at the overall market, which is QQQ and SPY. I'll also show you how SPY looks as we're in this trade. SPY, by the time we got to 9:53, this market continued to sell off. Let's show you 9:53 on Tesla. 9:53, the stock was still consolidating, right? Nothing changed on Tesla to make me get out this trade. It's showing me strength against the market. So let's say we do end up pulling back even more on Tesla or on SPY. I know that if Tesla holds up, longer in this consolidation, the next time we get a bounce in the market, I'll have a nice move to the upside. So for example, the next big move we had on SPY was 9:58 to the upside. Let's go to 9:58 on Tesla. As you can see, we held up so long in that consolidation, we never continued to drop with the market. So the next time we got a big green candle on SPY, we got a nice candle to a new high here on Tesla, which wasn't much, but at least we weren't dropping on the stock that we were trading. So those are the key things that I'm paying attention to while we're in a divergence place. Once I see Tesla start reacting in a strong way to the big market pullbacks or the big market pushes, then I'll know that Tesla's moving hand in hand with the market. So with the divergence plays, it always starts with these types of moves. Whether I'm getting a big push up or a big push down, what is my stock doing? And that's why I pay attention to these divergence plays, because I have something to reference to, right? When we're just trading, stocks into key levels and, it's moving hand in hand with the market, there's not too much I can work with other than obviously the tape that we're used to using, which is time to sales, level 2 volume, and then obviously the trend lines and the key levels. Yes, I'm going to still use that with divergence plays, but now I have something extra to use on these plays as well, which is the overall market. Now I can see markets pulling back, Tesla's holding up or pushing, in an inverse way, which is the upside in this case, showing me that we also have strength. So I'm using another comparison or another confirmation for my trade on divergence plays. It allows me to add more confirmations to my trade, which I love. So my favorite thing when it comes down to these divergence plays is I have something to use in relation to my stock, which is the overall market. If it's just moving in the direction, I can't really justify the move. Is it moving with the market? Is the market stronger than my stock? I want my stock to either be weaker than the market or stronger than the market. And obviously Tesla showed me that it was far more stronger than the market. Where did we even peak out on Tesla? Look at 1038. It looks like we peaked out on Tesla on Friday. Let's look at 1038 on SPY. 1038 was this big red candle. Remember, I said even when we have divergence plays, a big red candle or big green candle can still affect our stock. Our stock didn't start dropping until we were at the low of the day at around 604. Remember, the high of the day was 607. We had to move 3 points lower for Tesla to even flinch lower on this stock. Remember, we had to drop 3 points on SPY for Tesla stock to even flinch to the downside. So that was a big reason why I stayed in the stock. Now, I wish I held till 431, but I didn't. I ended up scaling out above 425 into 426, and then I took a quick scalp from 430 to 431, I would say 30, and I think this ended up hitting a high of 431.60. So it was almost like a perfect sell, and I ended up scalping it. Worked out in my favor because I just wanted to scalp it. I didn't think it was going to peak there, but market ended up getting crazy, and Tesla ended up pulling back all the way down to 421. Now, even with this big pullback, Tesla stock was still stronger than the market. As the market continued to consolidate and move lower, you could see Tesla continue to move higher. The problem is when you hold that long, your contracts end up losing value, time decay comes into effect, Friday contracts end up expiring, all those things come into play. So I'm very happy I took advantage of the play on the original breakout of 420 into 425 and then continued to scale out after that, and then only took a scalp at 430 to 431. So that's one of my favorite or the favorite strategy when it comes down to my everyday trading. It's divergence plays. I'm paying attention to the overall market on SPY and QQQ and then justifying it with the stock movement or the price action that I'm getting on the individual stock that I'm playing. Because I have one extra thing of confirmation that I can use to trade this stock rather than trading a stock to the upside while the market's moving to the upside. And then let's say the market ends up pulling back, my stock's going to end up pulling back because it's moving with the market. That always sucks when you have a really good play. So I always stick or try to stick to divergence plays. Now, my second favorite play that I really like to trade are consolidation plays. Divergence plays is number one. Consolidation plays are number two. Why are consolidation plays one of my favorite trades? Well, there are a few reasons, and one of the reasons is I trade options. So when stocks consolidate, right, IV decreases. We've talked about IV a few times. IV is implied volatility. In simpler terms, it's expected move for the week. So when IV decreases, that means the expected move for the week decreases. Why? Because it's taking a lot longer to move. So for example, Monday, Apple stock IV is extremely high. So the expected move for the week is, let's say, a $10 range. We consolidate Monday, we consolidate Tuesday. It can no longer be a $10 expected move for the week, so IV decreases, so let's say $7.50 for the week now, meaning contracts also have to get cheaper. So why is that beneficial to us? Well, it's beneficial when consolidations happen because IV decreases, contracts get cheaper. And when I say cheaper, it's not about the price of those contracts because it doesn't really matter if they're cheap or expensive. It just matters if we're going to get the right returns on the expected move that we want. So let's say when they decrease, what happens? Contracts get cheaper, quote unquote, because it's only expecting a $7.50 move. So when it actually breaks out, IV will then pop again back up to, let's say, $10, $11, $12. Our contracts will get a lot more expensive very quickly. So versus, let's say, IV originally on Monday, let's say we got a $2 move. We would have got paid, let's say, 12%. I'm putting numbers out. IV decreases, then we get the move. And let's say we get the same exact move that I was talking about previously on an IV drop. We'll no longer get 10 or 12%. We'll get 20, 25% because IV decreased. And through that trade, we got in before the pop. IV then goes back and increases back to the 10 or 11, $12 move that we respected for the week. And then obviously in our favor, if we have calls, the options also do move higher because options get more expensive as the stock moves in your favor. So that's one of the biggest reasons why I love consolidations. Second reason I love consolidations is it's very easy to read, right? You can always wait for the move to happen rather than trying to guess. A lot of people try to get into consolidation breaks before they happen. I understand you want to be there before the move happens, and there is still a way to get into moves before they happen on consolidation breaks, but you don't have to be too early. You can actually see it on the volume and times and sales. So let me show you guys something on the bigger time frame. So let's go over to Apple here, right? I'm going to show you guys something here, and then you'll see exactly what I'm talking about. So, for example, here, you'll have Apple. We'll do it a few times here. At 236, it continues to get up there and rejects. You can see the bottom side at 234. You can see we stayed in range for a couple days here, right? This is November 26th. It consolidated all the way through to November 29th. When we finally break out, it goes from 236 all the way to a high of 237.80. Now, you might say that's not really a big move. On Apple, it is. And not only is it a big move, it's also a big move because IV has decreased those 3 days because every single day it's consolidated, the expected move for the week also decreases as well. And then when you finally get the move, IV then pops back up to where it was or even higher, meaning you get paid a lot more on those contracts than you would have on, let's say, the first day it could have broke out, right? Now, let's find another move on Apple. When it comes down to consolidations, yes, there are smaller time frame consolidations like the 1 minute, the 5 minute. My favorite consolidations are the bigger time frames. For example, like the 1 hour, starting there. Now, 30 minutes are still great time frames for consolidation. I like to find them on the 4 hour and the 1 hour because you get the cleanest moves there. So let me show you guys. I showed you guys this 236 break. Now, let's go to this one. This one was my favorite all week. I like to use the highest point here, which is 244. Right? What's cool about this 244.50 level? That it consolidated at the top here, and then we'll put it at the bottom. I like to use the lowest point, or one of the lowest points here, which is 241. What's cool about this breakout at 240, or this consolidation at 244.50 before we even break out? Well, 244.50, what's the key level or psychological level we'll have next on Apple? 245. So not only can I wait for a confirmation of break of 244.50 on Apple, I can wait for 245. When 245 comes, that's where I can end up taking that trade. As you can see, this trade went from 245 all the way up here to 247.24, another $2.24 on Apple. Now, what's cool about this is I ended up actually taking this trade on Apple with some of the other managers. I don't normally trade Apple unless I'm getting one of these plays on the consolidation side. I don't really even take Apple on divergence plays. I really stick to my favorite, volatility stocks when it comes to divergence plays, such as Nvidia, Tesla, even Netflix, even though I really hate trading Netflix, Amazon, all those trades I like, or all those stocks I like to use for divergence plays. With Apple, I really stick to the consolidation plays. What's cool about this is we have another consolidation that we're dealing with here that you guys can maybe take advantage of, right? Yes, you do have a high point of 251, and you have, some rejections here at 250. I like to use the highest point for confirmation, even though, you've only got one rejection here at 251. But you also have a flat bottom here, it looks like at 246 to 245. I like to use a range like that so you don't get too focused on using a specific number for a breakdown or breakout. It'll help you not get caught in false breakouts or false breakdowns. So what I'm going to use for Apple here, hopefully this happens this week or the next 2 weeks so you can see exactly what I'm looking at, is I'm going to use 251 as my breakout level. What's cool about 251 as my breakout? What's cool is this key level on Apple's 250. So what I'm going to pay attention to if we can break out or not on Apple is I'm going to use 250 as my key level. I'm not going to take the trade. I'm going to see if we can even break above and hold. If we can hold 250 and I start seeing price acceptance above 250, then I'll use 251 to take advantage of this. Obviously, what I've seen previous to Apple and the history of Apple's breakouts, the normal breakouts are around $2.50. Now, am I going to hold the full $2.50 on Apple? No, but I understand the amount of range this usually has on breakouts. So from 251, where am I expecting? Right? I'm using 253.50 as my next key level. Even though I have a psychological level at 252.50, Apple's psychological levels are every $2.50. So 250, 250, 250. All right, here we are. This is 252.50, and then from history and what I've seen on the previous breakouts, it usually has a $2.50 breakout from the consolidation break, which the next level would be 253.50 because the breakout is 251. So I'm going to set this up here and use 253.50 as my full target range break on Apple. So what I will do is I'll take this trade and scale out as we get into this next key level or psychological level at 252.50. And then obviously if it shows me any strong divergence as well, because you can also have consolidation and divergence plays together. It doesn't just normally have to be divergence by itself or consolidation by itself. You could end up having a consolidation play that turns into a very strong divergence play compared to the overall market, which I really do love. So if I see any type of divergence in Apple, I'll end up trying to hold some of my position to 253 or even 253.50, depending on the price action we're getting from Apple. Now, when it comes to consolidations and divergence plays, the normal things that we use on a daily basis don't go out the window. For example, I'm still using times and sales to give me some answers. I'm still using level 2. I'm still using volume. I'm still using trends. So if I have a trend, I don't have one right now, but let's say I have a trend that stops this at 251. I still have to pay attention to that because 251 can be another rejection area for Apple. So I don't want to just take a trade just because consolidation happens there. I want to still make sure that I don't have any trends in my way. I don't have any supply and demand zones in my way. All those things come into play. So just because I like divergence plays and I really like consolidation plays, supply and demand zones are still a real thing. They're still on my chart. I still need to pay attention to. Does it mean I won't take the trade if it leads into, let's say, a supply zone? No, I'll still take the trade, but with more, understanding of how much more risk I have on the table versus not having anything there. Or trends, right? If this trend right here was, let's say, at 251, I would have had to pay attention to that and say, okay, I'm going to have to size a lot lower on this trade, or I'm going to have to skip this trade as a whole. That's why I really like consolidation and divergence plays, because all those other things that I use on a daily basis still come into play, and I can use them to either, go heavier, go lighter, or not take the trade at all. And I hope you guys enjoyed this video. These are my 2 favorite strategies that I use on a consistent basis and have made me the most profitable. If you guys like this video, hit that like button, comment down below what other videos you'd like to see on this channel. Peace.